Hey, good afternoon, everyone. Thanks so much for coming in this afternoon. I'm going to show you. I'm going to show you a system that's going to blow your mind, and I kid you not. Um, I just wanted to. We're www.rightlinetrading.com, info@rightlinetrading.com, and our phone number 786-713 um, 5276. Now, I don't have a lot of slides to show you, and a lot of the information that you're going to see is going to be redundant to a lot of the uh, traders here in the room. But most of the information I'm going to show you on a live chart. I have everything running right behind the slide, so you may hear some chart noise and some alerts. Just a little short introduction about me. I'm a graduate of the University of Pennsylvania. Former professor at Jefferson. I've been involved in the financial markets for really well over 20 years. And I began trading the Forex, futures and Forex markets actually in 2003. It was just getting to be a long time ago. And my training is really focused on the optimization or modeling closed systems and the optimization of the performance of closed systems. And in my graduate work, what I did was I did mathematical modeling for the U.S. Navy, where we optimized underwater decompression schedules, which at the time, coming up from a deep dive, hundreds and hundreds of feet down was very, very dangerous. And the University of Pennsylvania had the #1 department in the world for decompression sickness, and they had multiple bariatric chambers where divers would come who had the bends. These were very dangerous dives, and the way to come up from a deep dive had never been looked at systematically via mathematical modeling. And really, I was one of the first to do that. And that same mathematical modeling principle was ultimately brought to right line trading in determining the future movement of price on a given financial market. Now, the first indicator I want to go over with you is our 3 line. And the 3 line may be very well known to a lot of traders, and many of you may not know it. So for those of you who do, it'll be a little bit of a review. And for those of you who are new to it, I'd like to explain it. And what it does is it looks at 3 different forces that come to bear on price in any given financial market and on any time frame. The first line looks at the multi-time frame assessment of momentum. The second, the multi-time frame assessment of stochastic. And the third, the multi-time frame assessment of order flow. Now, what makes these independent variables, i.e. their assessment is independent of your trading chart, is that they do not assess price movement from your trading chart. They only assess price movement from the 2 higher time frames. So we unlink their assessment from price movement on your chart, because that's what creates lagging indicators. When the indicator assessment is based on the way price moves on your trading chart, it tells you where price has been, but it doesn't tell you where price is going. But when indicator analysis is based on the movement of the 2 higher time frames, price on your trading chart almost always moves in that direction when the 2 higher time frames align. And the algorithm built into the indicator knows what those 2 higher time frames are. So let's say that you're going to trade a 3-minute. Well, it's going to set your 2 higher time frames in 9-minute and 27 minutes. 3 times higher and then 3 times higher again. So a 3-minute would go to 9-minute and 27-minute. If you're trading a 5 range, it goes to the 2 higher fibs. It goes to the 8 range and the 13 range. If you're trading a tick, it'll take your 377. If you're trading a 377, it'll go to the 610. And then the next higher fib number. And if you're trading any number in between, it'll default to the nearest round number and then take that fib number and give you the 2 highest. It'll always multiply your time, the speed of your time by 3. So let's take a look at each of these different forces individually and look at order flow. Now, order flow is a really, really powerful assessment of who's in control of the market, the bulls or the bears. But if you look at the delta of any individual candle, most down candles have a negative delta. And the delta tells you whether there's an whether there's an imbalance between the number of aggressive buyers versus the number of aggressive sellers. And when the number is negative, you almost always get a down candle. When the number is positive, you almost always get an up candle. But that is not always true. So if you use this chart, which is the way most delta assessments are looked at when they are graphed like this, you can get this graph falling on an up candle or rising on a down candle, which doesn't really help you predict the future movement of price at all. Now, the reason you may get a positive delta on a down candle is because there's absorption here. And you just get an enormous number of buyers here, or sellers, excuse me, that push this candle down, even though the delta is positive. So what we do to overcome this is we first totally ignore the delta of the candle on your trading chart. And we look at the delta of the candle on your 2 higher time frames. And then we put that delta value in a 15-period moving average. And what we create is a delta moving average. And when the delta moving averages of both your 2 higher time frames are heading up, you have very strong buying conviction. And when they're both headed down, you have very strong selling conviction. So these outliers, where you get an up candle, where you get a positive delta on a down candle, or a negative delta on an up candle, when placed in a 15 period, don't have much appreciable effect on the slope of that moving average. So, and the moving averages have to align. So they both have to be to the upside, or they both have to be to the downside. And when they are aligned, it gives you a tremendous ability to see who's in control of the market at that given time, the bulls or the bears. So here is the third line, or our order flow tracking line. Now, you cannot trade in a counter trend direction, and this gives you an absolute trading bias direction. Throughout here, the bulls are firmly in control of the market. Now, I took the delta of the candles of our trading chart off because they're irrelevant. All that's relevant is the delta moving average of the 2 higher time frames. And you can see when there's significant buying pressure, price is going to rise. And when there's significant selling pressure, price is going to fall. And the important thing, again, to remember is that this assessment is independent of anything that's going on your trading chart. So it's a true independent variable and a true independent predictor of price movement on your trading chart. It is a forward-looking indicator, not a lagging indicator. When this is green, it causes price to rise. Price rising doesn't turn this green because it doesn't even look at price on your trading chart. Now, here's examples of how we trade it. And here are areas of support and resistance. And when the order flow tracking shows extreme buying pressure, once you break resistance to the upside, you're going to look for a long trade. You see all the traders trading inside the zone of resistance, And even this one candle here, where this trader is trying to counter trend trade against the direction of order flow, and they're almost always going to get stopped out. And here's another example. This is a short I took in the trading room. Now, it does not matter the instrument or the time frame. This is operational on stocks, futures, forex, on any time frame at all. You have to trade in this direction, or you're going to run into big problems. And you can see all these traders in the counter trend candles who are just asking to get stopped out, and they do. And this is a little more sophisticated analysis, but really representing the same thing. Once you break support, or I'm sorry, this is resistance, you're going to come down to support, out, then you're going to kind of move around here. You don't have a long trade because order flow hasn't turned. And then finally you move up to resistance and you short in the direction of order flow. So you have an absolute direction. And obviously our goal in day trading is to eliminate risk. And if you try to counter trend against this line, you're adding a significant amount of risk to every trade. On this move down, green candle, green candle, green candle, stopped out, stopped out, stopped out, stopped out. You can't counter trend trade this line. Just another example, sitting on support, up it goes. And you'll be amazed how this calls the trade before it happens. You'll be sitting in consolidation on support. All of a sudden, the candle outline will go green, telling you that order flows aligned to the upside along with stochastic momentum, and the trade will launch. The higher time frames call it, and you can get in on this forward-looking signal. Now, here's just a move back to support, up in the direction of order flow, down, up, an order flow, down to support, and up. Now, if you want to try to take a counter trend trade, you have to wait till order flow changes. Now, this is all going to change because I'm going to show you how we trade this on a Renko. So it's going to be a little bit different. I'm just trying to show you here the principles of how important it is to take trades in the direction of the delta moving averages of your two higher time frames. Now, I want to talk about MACD, which is what we use. There's a lot of indicators we can use to assess momentum. Actually, an oscillator is a good momentum indicator. Heikin Ashi is a good momentum indicator. MACD is a good momentum indicator. And that's what we do to assess momentum. But we assess it in a little bit of a little more sophisticated way. And you're going to see that the 3 line is going to project data that's really a nice and a much more sophisticated analysis. First of all, I wanted to show you about MACD divergence. And you can see here that these pivots make a higher high, and the MACD makes a lower high. So if you're going to try to fade the market, you're going to get stopped out. Here, you swing right back up to an equal high, and the MACD makes a much lower high. And if you try to fade the market again, you're just going to get stopped out. Now, this market is never going to turn based on MACD divergence. It's going to turn when the institutional investors decide that they're going to stop plowing their money into this instrument long. That's when it's going to happen. And a proxy for that is order flow. When there's an overabundance of buying, you cannot try to counter trend trade the market based on divergent signals. In fact, you can't even counter trend trade the market based on a MACD crossover from your trading chart. This black line is the crossover. And you can see that the MACD line crosses the signal line and is all the way below it, all the way down to here. And if you try to go short here, you would be in the red almost the entire move down, and you would just get run over. So the predictive value of the MACD on your trading chart is really, really poor. Now, I just want to say one other thing about the MACD. Now, the 3 line is going to turn green or red based on the MACD crossover. But the assessment as it is projected onto your candles is a little bit more sophisticated. It's not going to wait for the MACD line to cross the signal line. When your 2 higher time frames have a MACD sloping down, the line will still be yellow, but the projected candle color will tell you that you have a 3-line alignment. And I'm going to show you that in a minute. So it's a little more sophisticated in analysis, and if you had to do this on 3 time frames or 2 higher time frames at once, you go a little crazy. So now we have 2 independent variables that we need to align in order to take a trade. We have momentum and we have order flow. And again, it's the same thing. You must trade in their direction, or you're likely to get stopped out. And if you take a trade in their direction, you have a high probability winner. Now, it doesn't make any difference what the time frame is here or what the instrument is here. These are range, obviously, but it's irrelevant whether they're 8 range, 10 range, 21 range. You've got to trade in the direction, the combined direction of order flow and momentum, or you're going to get stopped out. And again, you've got a ton of people, ton of traders trying to counter trend trade, and they actually make this trade easier for us because when we stop them out, they have to buy their contracts back, and they help push this move up. So the more traders we have counter trend trading and creating a down candle, the easier this move is going to be to the upside. Same thing to the downside. Now, here's what's really important to remember. That when the first line, which is momentum, and right now I haven't added the third, but the second line, which is order flow, they don't align. If you ever ask yourself, why does the market chop? Well, the market chops when these 2 forces, which are equal in power, don't align. The momentum is telling price to drop. Order flow is telling price to rise. And so price just chops. So if you take a trade when the 3 line is not in alignment, you have a high probability stop out in chop. But when you take it when the 3 line aligns, you have a nice low risk, high reward trade to the downside. This is just giving you a directional bias. It is not giving you an entry. Again, no alignment here, just chop. Alignment, break. Great long trade. Now, the stochastic analysis is also fairly sophisticated. When the market, when the stochastic is overbought, the line will always be green. When it's oversold, the line will always be red. It will ignore whether the stochastic line is crossing the signal line. As long as it stays overbought, you have a solid green line. Because this crossing, you can see, is just going to be confusing. And as long as the market is overbought, the bulls are in control. As long as the market is oversold, the bears are in control. And we don't care if there's this constant crossing of the signal line with the stochastic line. Now, once you drop from overbought or oversold, then the line is determined by whether the stochastic line is below the signal line or the stochastic line is above the signal line. And then there's still one more additional parameter that's assessed. If assesses stochastic divergence. Now, stochastic divergence on your higher time frames does have a little bit of throw weight. Now, this is failed divergence on your trading chart. Now, if you try to use divergence on your trading chart, it's going to fail as often as it succeeds, and that's not an indicator you can use. Can't use a signal that sometimes works and sometimes doesn't. You have to use a set of signals that always work, except in very rare instances. And every great entry signal sometimes fails. But this is just an unreliable entry signal. But when divergence occurs on your higher time frames, what the indicator, so just to sum up, when the market's overbought, the oscillator line stays green. When it's oversold, it stays red. Now, in between the two, the color is determined by whether the oscillator line is below the signal line or above the signal line. Now, in a strong uptrend or a strong downtrend, potential divergence will trigger a color change. And I'll show you right here. You have a strong color change, and it triggers the stochastic line to go red for one candle. Now, if you're thinking about entering a trade, I just ignore it. But there's some traders that will step back on potential stochastic divergence off the higher time frame. So it's really, really doing a very, very sophisticated analysis of all three of these individual forces that move price. Now, here's all three lines in place. And I'm almost done with my slides. And I've only been doing. Now, you can see right here, this candle. Now, the candle outline color, you can determine. It's a setting inside the indicator. I made mine sky blue, and the candle body is a little bit similar. But you can see, even with this yellow area of momentum, it means that the MACD line on the two higher time frames are moving up. They just don't cross until the line turns green. But just the fact that they're moving up is enough to turn the candle color long. And all you're looking for is a move up and a pullback, long. Move up, pull back, long. Move back to support, long. That's all you're looking for, because that's the only direction that you can trade as long as the candle color is outlined with an upside color. This is the same thing, up a little closer, back to support, long, back to support, long. And these are all the unfortunate counter trend traders who are going to get run over and help propel this trade long. Now, I made the outline thicker. It's the same slide. And here I changed the candle outline. So you can see right from here, this is a different analysis. Back long, back long, back long. As long as that three line stays set, green, 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 or the candle's outlined in green, which may occur on a yellow momentum line, you're in for a long trade only, and you do not counter trend trade. Now, I'm going to show you our system now. Now, it's a Renko chart, and it relies heavily on the three line. It relies heavily on market structure and our oscillator. Now, the oscillator and the parameters for taking the trade are really, really quite simple. And I'll tell you, you're going to be very, very hard pressed to find a loser, because it's amazing enough, they just hardly ever occur. And we're going to go through, I'll go through instruments for you until we're blue in the face, and we will rarely find a loser. What we're looking for is a move up to the 50 and the 50 acting as resistance, we get a reversal candle. Now, we can only take this reversal under these circumstances. One, a wick traverses that 50, or the candle body is 8 ticks off the 50. We get a down triangle from our oscillator crossing, and we're in at the bottom of the candle, and down we go. This is a huge move. I didn't scale it, but it's very big. Same thing occurs here. The wick touches the 50, and down you go. You have no trade here. You have no 3-line alignment. And you have no trade here. That's a down 3-line alignment. So these are your only trades. Now, this one in the corner here is not a trade, even though it went a long way, because the 50 has to be red or yellow on a short or green or yellow on a long. On this particular short entry, the green, the 50 is green. Here's others. This went 40 ticks. Perfect short. Now, momentum is still yellow, but we know that the momentum line or the MACD line on our 2 higher time frames is still moving to the downside. It just hasn't crossed over yet. But the 3 line doesn't wait for the crossover. If it did, it would signal you in late. And that's why we modified its assessment. We don't modify it on the 3 line, but we modify it on the projection of the data on the 3 line. This is a yellow 50. This is 2/3 of the candle body is below. You've got a short trade here, and that's 40 ticks on crude. These are 2 trades on the E-mini that occurred on the 14th of March. And they're both, I mean, you're going to see they keep happening over and over again. There's the down candle. You can take the trade because you have the 3 line. See this down candle here? There's no 3 line. It's the exact setup as here. No 3 line. The next 3 line is up, and you get an up candle. So if you took this entry short, you get stopped out. You wait till the 3 line turns, trade in the direction of it, and down you go. I think this is 5 or 6 points, and I think this is 7 or 8 points. Now, this is just 1 tick off the 15, this 50. You can take this trade. Here's another one. 3 line, oscillator signal, up. Now, this may have taken you out on this down Renko, but you still made nice money on the move up. If your trailing stop is big enough, you could have gotten this whole move. And there's no other trades on this chart. You can see right here, this entry short is on a green 50. You can't trade it. This entry short is on a 3 line that's angled up. It protects you from these losers. This entry up right here has no 3 line alignment. It would have given you a small winner. You're not going to get into every winner. All that matters is when you take a trade, it works. And here's another one. This is 29 ticks on crude. Perfect trade. 2/3 of the candle bodies below the 50. You've got the oscillator signal. The outline is there, and down you go. This one, I assumed you're going to be out on the Renko candle reversal. So this, I scaled this as a 29 tick trade. And these are 2 more. This is on gold. I didn't scale them. These are both really not. I mean, these are day finishers. Up, up, This is an up candle that you can't take for two reasons. One, this candle wick is just a little too far off. This candle wick is just a little bit too far off. It's more than a tick. It's too far off support. And your concern is that price will retrace back to support and then move up. Now, it kept you out of a winner, but that's okay. As long as you can sidestep almost every loser, that's all that matters. And these two trades are day makers for you. If you trade these with 2 or 3 contracts, you're going to finish with $700 or $800. Okay, that's the special, and I don't want to even go into that. I'm just going to show you. Let me show you a live chart. And show you that it didn't cherry pick. Now here's the E-mini. I'm watching it live. Let's go. We'll start with the beginning of today. But I tell you, I could go through this thing for 100 years, and it just wouldn't matter. All right, here we go. Now, I'm not going to look at anything in the morning, in the middle of the night. Now, right here is your first winner. The 50, I can see right behind it, is green. The 3 line is green. You have a signal right there. That occurred at 10 o'clock, or this occurred about 10:21. Now you're going to be in 1 tick above the close right here, and that's 2.5 points. Not a huge trade. You don't have an entry here. The 3 line is not aligned, and you don't have a 2/3 candle body. So I'm not going to give you entries just because they worked, unless they're real entries. The point is, there's no loser here. There's absolutely no way you could take a loser. Now, this is a short trade. It's too far off resistance. Cannot take it. You can't take this trade. We're only going to look at the... Now, here's an entry right here. It's not a huge trade. Your entry is just about 1 tick below. You go to this wick. 2 points. Now, that's a tough long trade. I'd like to say that you got it, but the wick is just not close enough to the 50. There's your trade right here at 8.19. If the wick breaks through the 50, you have a trade. It's early. It is pre-market, but at 8.19, I would consider to be valid. And you're at 4.25 points. Just because the 3 line turns here is irrelevant. Once you're in, you stay on the trailing stop. There's your next move right here. You're on a yellow 50. The wick moves all the way through, and you have your second trade. $3 points. Now you have 7.25 points. Now you have your next trade. Right here, the wick went through, the 3 line is aligned, and you have your next one. $3.5 points. Now at this point, you might consider yourself to be done. Now, if you tried to reach for this trade, you would lose. But it's just too far off support. You really want that wick to touch or cross the 50. There's your trade right here. Perfect entry. The wick crosses, and there's your fourth entry. You're in right about here, 1 tick above the close of the previous candle, and you've got 3.75. Now this one's a little bit far off support. You've already got 4, 5, 6, 7, 8, 9, 10. You've already got 13 points. I mean, I would stop. Now, this is not a down candle. You don't have the 3 line. And this is where we are right now. So today, you would have made on perfectly valid trades with no potential stop outs. You can't take a short above the 50 or a long below the 50. If you stick with our trading rules, and they're not many, this is such a simple system, it's very, very hard to take a loser. And they come once in a blue moon. And I'll go back a little bit, and then I'll show you some other instruments, and I'll answer questions. I'll show you our offer. Now, here's a short. Now, it's 15:01. It's a little late in the day, but you can see how it works. Now, this short you cannot take because you can't take a short on a rising 50. I don't want to, put trades under your nose that just because I can see them red, I'm not trading the right edge. But you want to take your short trades on a yellow or red, long on a green or yellow. So yellow, you can go in either direction. Red short, green long. So it's an incredible setup. And technically it works perfect, but that 50 is a problem, and it will decrease the probability of an entry if you try it. Now, this one's just a little bit too far off support, but it's a winner. And here's your short. And here's your short. Here, I'm not even going to scale them. And here. 2 more winners. Now, I have not found a loser. And believe me, if you can show me one, I'm more than willing to check it. I'm telling you, there isn't one. Now, look at that trade. Now, it's just 1 tick off the 50. If you didn't take it, I would understand. If you did take it, it's 11 points. That's a trade, that 1057, that you would be mandated to take to follow our rules. And you're in 1 tick, and you absolutely have 7 3/4 points. Absolutely. You can't take that trade long. You're below the 50. Candle body. It's not breaking above. You can't take that short. You don't have the 3 line. And look at that trade. That's it for your day. Your last one was 7 points. And this one is 8. So you have 15 points on these 2 trades. This one occurred at 10:09, and this one occurred at 10:57. So you want to trade more? Now, this is a perfect entry, except you don't have the 3 line. So you can't trade it, even though it was another big winner. Now, here's a long trade that is just going to make it. Uh, 1.75. Now, our first target is 6 ticks. And made it to 7. Then you let we give that second contract an enormous space to run. But you want to lock in a 1.5 quick, and then take your second one off, hopefully in the stratosphere. Now we'll go through 1 day, and then I'll switch instruments. There's another short. The candle is into the 50. I'm not going to scale it, but you can see it's a big winner. Look at these 2 trades. Here and here. And these are, you got to press your mouse here. I'll just scale this one. So even if you let that iffy one, that's 7 1/4 points. This one's probably about 5. So you have 12 points here. So I think it's, it's time to just cash it in. Now, unfortunately, you missed this trade, no 3-line. This was an entry, and I think it's going to get you your 6. We'll see. Just makes it. That's the closest call we've had. And there's another one at 10.29. The 50 is yellow. So let me move it to another instrument. 6 points, 6.25 points. That was a little bit too far off support. I think you get the idea. Now let's move to the NASDAQ. A lot of people find the NASDAQ very difficult to trade. Now, Gary, one of our traders, helped us develop this. This guy makes between $1,000 and $400 a day, and I kid you not. He sends me his JPEGs every single day. You can see there's a lot more chop on the NASDAQ. Now, unfortunately, you have no entry here. It's an up 3-line. There's no entry here. It's an up 50. There's your entry right there. Wick is through. Let's see how far this goes. You're in 1 tick below. If you got the full excursion, you got 8.75 points. There's your next entry right here on a yellow 50. And the thing about the Renko is, and the simplicity of the chart, it's very easy to follow multiple markets, and you're in. Now remember, this is falling, so you're only looking for short trades. Now that's just not a trade. It's unfortunate, but the 50 hasn't rolled yet, and so you can't take it. Now, that's a long trade. Let's see how far it goes. It goes 1.75 points. Now, we haven't set a first target on here. That might not be far enough, and that might be our first loser that we've seen out of about 200 winners. Seriously, but I don't know. We have to assess it. There, look at this winner at 941. And that's the thing. You get about 9 winners. Now, very modest 425. If you're not out on this reversal, you've got yourself a monster move. It's just that the way the system, now this might be a loser right here. The NASDAQ is tough, and that looks like it's a loser. That's not going to go anywhere. So at least I want you to know that it's not faultless, but the NQ is definitely, there's a winner right there. There's a winner right there. The 5th that it touches, and you've got a short. There's another winner right there. And that's a tough one, but this is at 5:52 in the morning. So let's just look. So let me go to another instrument. Let me go to gold. Now you can see the E-mini is really a killer, but gold does very, very well too. There's your short on gold. Look at that trade. I'll just scale this one so we can get a little perspective on it. Maximum excursion is 25 ticks. There's another winner on gold. I'm telling you, this is the most reliable trading system I have ever seen. 14 ticks. There's another trade. The 50 is green. Maximum excursion, 26 ticks. No entry here. No modified, no three line, no entry here. No entry here, no signal. No entries, no entries. When the market chops, you just will not get set up. There's your short right there. Another winner. There's a short, no three line. Censors that loser. Now here's a long trade. It's at 1436. It's late in the afternoon. I don't know the volume. So let me see if there are any questions. Let me show you. Let me share our offer. It's a killer trading system. And while other traders, I'm telling you, are laboring away with much more complex systems, this one is just running amok. When it sets up, the likelihood of you getting a winner is extremely high. Now, the Renko system, it's normally $19.99. For the webinar special, it's $9.99. And if you're a software owner, if you have anything from one indicator to the full suite, it's $5.99. And if you're one of the first 10 orders, you get a month in the trading room with me, and I'm going to start trading this alongside my regular e-mini. And you get a 10 module weekly educational training system, and it expires on Sunday at midnight. So let me just see if there are any questions in the room. And then one sec. Okay, hang on here because there are. You know what it does, Ray? What it does is it looks at the size of the that's a great question you asked. Ray asked, what is the speed of the three line when looking at a Renko? What it does is it looks at the size of the candle body and takes the closest fib number. So if you look at the candle bodies, if we go back, the candle bodies are 7 ticks. So what it would do is it would default, they're almost all 7. So it would take this as a 7 range, default to the 8 range, and give you the 13 and the 21. So that's a really, really good question. And that's what it's doing. It's going to look at generally what is every single candle body, which is 7 ticks. Default to your closest fib number, 8, and give you a 13 and a 21. It's a real chart. I mean, I'll show you the Renko inputs. I mean, it's moving right now. Right now, there's very little market movement. I'll put it on the E-mini, which is at least moving a little bit. But this is a live chart. So you can see the right edge. I mean, there's not much movement, but this is a real chart. And that was an entry I didn't even show. There's a winner right there at 13.13 today. And that's a very, very nice winner late in the day on a market that's not doing very much. I mean, here's your down. And you should be done by now. But if you just take it to the bottom, you have 4 points. And this market is moving. This is a live chart. John, this will work on right now only Ninja. We just developed it. It's just on NinjaTrader. Now, if you want to trade another platform, you don't have Ninja, you can take the signals off of it. So you can trade any platform, just make an assessment, like right here, of where this closes, and this close is going to be one tick below, which is 27.60.25. Set your sell stop for 27.60.25 and just take the signal off. You can see even when the market moves pretty fast, these do not move particularly quickly. It takes about a minute or so for each Renko to form. So especially on the E-mini, unless there's something really crazy going on, you do not get quick Renko bars. They're very slow to form, and they usually give you plenty of time to get in, usually 60 seconds or so. Vladimir, I showed you the NQ. The NQ is the toughest for any system to trade, but it's still going to make you money. Okay, I'm not sure. I'm sorry, Anthony. I don't know which. Anthony, let me go to the end. I should have put the questions up while I was doing it. Anthony, I'm going to go to the end. Which chart was that on? Because it's hard for me to go back because I was looking at all kinds of different charts. Maybe the 3 line wasn't there. I wish I knew what the entry was. I'm really sorry. I'm sure there was a reason if I told you it wasn't an entry. Okay, the 3 line is not aligned in that trade. No, we give you the Renko, Paul. As part of the package, we send you the Renko bars to insert with the settings 5, 2, and 10. So you don't have to worry about that. We send them to you. And they just seamlessly go into Ninja. Right now, John, we've done it about 90 days. We want to do it 2 years, but I'll tell you, it's incredible on 90 days. Basically, what I've shown you is just repeatable over and over again, and I mean that seriously. And what we're going to start working on already is automating the system and making an algorithmic system and an auto trader. The signals are so easy to automate because the automated system we have now has I don't know, almost 24 parameters. This one has much fewer parameters to take, and every trade is taken off the 50. And that's always the sweet spot of every trade. That's always where your risk to reward is highest. So we don't even have to have an overbought, oversold indicator, because once you're in the chart right at the 50, your goal is just to ride it down as far as it'll go based on what kind of a trailing stop you want to take. And you can see the E-mini is really weakening into the close. So about 90 days, John. Joe, we give them to you. As part of this package, you're going to get the Renko bars. And you just insert them. They go right in. The Renkos. You don't have to worry about that. Everything you see, you get. Okay, hang on 1 second here. Okay, Robert, hang on a second. I'll do that for you. Okay, hang on. The 3 line, which is 3 line? Al, this is the 3 line right here. And this is projecting its data onto the bars. Now, if I open the 3 line, I'll show you the inputs. You see that you can decide what outline you want for down. When the 3-line aligns to the downside, I have it as orange. When the 3-line aligns to the upside, I have it as sky blue. And the 3-lines algorithm all automatically determines what speed to set the 2 higher time frames. We just made a V2 version, or version 2. The older version, you had to set the higher time frames. This one, it reads it automatically. So this is really the data you want to see. What is the color of the candle? And that tells you the direction. That's why this is a short. It's a yellow 50. It's a down close right off the candle body of the 50. The 3 lines got it encircled in that orange color. It's aligned. In fact, in this one, you have all 3 lines red, 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 red. In some cases, the yellow will still give you a red if the MACD lines are sloping down, but haven't crossed yet. And that makes a big difference in making sure this trade is going to follow through to the downside and not going to take you out and chop. Yes, I'll show you a stock. Robert, let me show you the EMD. And I don't have the EMD in. I'm going to have to stick it in real quick. I never looked at the EMD. We'll take a look at it. Okay, it's moving. Okay, here's the EMD. Let's see what we got here. See, no oscillator signal on a red. It's no trade. Now here's a tiny trade to the downside at, let's see how far this goes. This doesn't go very far. It goes 5 ticks. Not far. But that could potentially be your first target. Here's a really nice trade right here. Short. Here's two winners in a row. There's this one winner here. Here's this winner here. And so these are 2 nice trades. And I would never tell anybody that you're always going to get a winner, because you're never going to get 100. That's 12 ticks. This one is 21 ticks. And we'll go back one more day. Now here's a beautiful trade right here on this signal, 824. $35 ticks. That's a little bit far off resistance to take that short. It's 3:45 in the morning anyway. And this is after hours. So these are all winners, but I'm just not even going to count them. I don't think you'd be trading at this hour. Now, if you're trading at 2 o'clock in the afternoon, there's another winner. There's another winner. This is a little bit too far off resistance to take. I wouldn't recommend it. Even though it is a winner, I wouldn't take it. There's another winner. So, I mean, you're seeing winner after winner. There was one potential loser that went 5 ticks, depending upon where you set your first target. But there's multiple winners. Let's see if we can find another winner. Look at that winner. This is 9:44 in the morning. This is a no-brainer entry. The wick is through the 50. You're in about 1 tick below. A full excursion on this trade, 45 ticks. So I'm telling you, it doesn't matter what instrument you trade. you're going to get winner after winner after winner, and occasionally you're going to get a loser. But on balance, you are going to make an enormous amount of money. If you get stopped out on 2 contracts, you don't lose a whole lot of money. But if you get a runner, a 45 tick runner, you make a lot on 2 contracts. Now, if somebody wants, it's going to take me an awful long time to rotate this to Forex. If you want to see the Forex, call me and I'll set it up for you personally. I'm telling you, it trades just like these instruments do. It is no different than all of these. But what I have to do is I have to disconnect all these data feeds, and I have 2 data feeds. I have the CQG and kinetic data feed, and then change. It would take me about 5 or 6 minutes to do it. Otherwise, I'd be happy to show it to you because it works. No, I think John, if you stay with the E-mini and crude, you're going to do fabulous. In fact, if you stay with the E-mini, you're going to do fabulous. The E-mini seems to very, very. You can go a couple of days without taking a loser on the E-mini. Now, a stock I can show you because I have my kinetic data feed hooked up, and I can show you a stock. I'm just going to show you a stock that I happen to have in my. I'll show you Apple. I don't think you're ever going to find a system that is as straightforward as this that just continually gives you winners. Now, that's just not a short on Apple because you've got the 50 rising. This is not a short on Apple because the 3 line isn't aligned. And here we're on the right edge. So let's find a trade on Apple. There's an entry on Apple right here. The 3 line is aligned, and you've got a nice move up. Here you don't have the 3 line, which is a shame. Here you just don't get a signal. This is just a little bit too far off resistance. Little bit too far off resistance. There's a trade right here. Well, that's a winner. Maximum. That's 19 cents. This up is on a red 50. Even though it's a winner, there's another trade to the short side. Right here. Let me just take it out of stay in draw mode here. Right here, definite entry. Well, we'll take that 18 cents. I just don't see any major monster moves here. There's another winner. Here's another winner. I think this has gone enough to be a winner. Now, this is late. And I would just discount all these trades because it's 1550. What time is that? 3. Let me see. 12. 13, 14, 15. So it's almost 4 o'clock. Let's just go into the. There's you're just a little bit lifted off support, but that's a huge move up. Haven't broken the 50, no trade, nothing here. You see that 50 prevents the short. It's a rising 50. A little bit too far off resistance, even though they're winners. I just want to give you perfect trades. And here you go. There's your winner at 11.53. And there's your monster winner. Now, you're only taking a few cents worth of risk, but you make 30 cents on the trade. Now, the thing is, there's a winner. There's a winner. There's a winner. All with the 3-line perfect entries. Here you're on a falling 50 and you just can't get it. Here you're too far off resistance, no trade. And I'm not censoring losers, I'm censoring winners. So, I mean, I could go on and on. There's your trade at 9.58. That's a yellow 50. It's green here, and it's yellow right back there. Now, the thing that's important is you just don't get losers. Now, maximum excursion is 55 cents. If you want to, I mean, it's Apple. It's really expensive stock. I just want to show you a stock that's in my platform. That's all. So obviously, it'd be pretty hard to buy 1,000 shares of Apple, but it's going to work that way on any stock. All right, let me keep going. Here, John, here's the Renko. Five, 2, 10 are the Renko inputs. If you want to trade a slower chart, you can trade 10, 4, 20, but the 5, 2, 10 I like the most. No, we don't. You do not, Frank. You do not need the RTY. Yeah, again, Paul, we give you the Renko. Sure you can, Frank. You can call me just as soon as I'm done. This is a full trading platform. The entries are signaled, Adam, right on the chart based off the indicators that we provide you. This is a trading system that we're giving you, not just a set of indicators. And you can see it just hardly ever fails. And the reason I wanted to spend so much time on the chart, and not, I mean, 90% of the webinars, all I see are JPEGs. I want you to see these entries right here, live. Look at that long trade. Apple here, short here, long here. And you can see I censored every trade that was a winner that didn't meet our standards. There were a couple of short trades that still had a rising 50 and a couple of long trades that still had a falling 50. Since when we're on the right edge, we're not going to take those entries, even though they were perfectly set up with the 3-line. We need that 50 in our favor. And I'm telling you, you're going to increase your win percentage. So I stepped aside on a lot of winners. And I showed you the losers when we got them. John, I did show crude oil. I'll show it really, really quickly. I just don't want to burn everybody out. But I'll be happy to show you crude. Crude trades really well on this system. Here's crude. Oh, man, I was hoping we'd get a signal here, but we don't. Now, here's a short trade. This might not work. No, 7 ticks is going to make it. Your first target should be 5 or 6 ticks. Now, here's a long trade right here. That's a winner. I'm not going to scale them all, but crude is really choppy. Now, this is 4 a.m. So very, very few candles today except straight up, and then nothing. Just no potential entries today. And you did have this one short here and this one short here, and they both worked. And you have this one long here. This is 4 o'clock in the morning. Let's go to a trading day. All right, here's about 8 o'clock. Look at that trade. This is 6 o'clock in the morning, and crude can make great moves in the morning. Here's a perfect long trade. That's 33 ticks. Now, if we go through here, there's a short trade, and that's going to make it 7 ticks. It's just going to make it. You know, no trades here. There's another short trade right here. $11. Now here's a short trade I think that fails. We may have a loser. Yep, there's a loser. There's one loser. Let's keep going. You see, crude is real choppy here. What time is this? This is 13 o'clock. This is 1300 hours. Now, here's a huge move. Let's go to the meat of another day. Let's start looking about 7 o'clock in the morning. Till about 1 or 2 o'clock in the afternoon. Take a look. Okay, right here. Now that's at 6 o'clock. In the morning, it takes great trades. It's after the crude pit closes at 2 o'clock in the afternoon that crude starts getting tough. That's 36. Here's a winner here. No trade here. Look at this trade right here. $36. Another trade here. I won't scale it, but there's plenty of room there for a first target. This, you just don't make it because it's into the 50. It's got to be at least half to 2/3 of the candle below the area. There's your short trade right there on a yellow 50. Look at that trade. This is about the 4th or 5th trade in this trading day. Boom. 39. No trade. Nothing here. No trade here because you don't have the 3 line. There's a short trade. No, you don't. It's because the 50 is green. We have no short trade. Too far off resistance. No 2/3 candle close. No trade. No 2/3 candle close above. There's your short trade. 2/3 candle close below. There's your entry, surrounded by the 3 line. And look at that trade. $29 maximum. It doesn't stop, but you can't get back in. Now here is a loser at 11:38. I think. I don't think it goes 5 or 6 ticks. I'll go 7, so it's a winner. Now that's close, but you just can't take that trade. It's just not enough through the 50. I wish you could, but you can't. And you're too far off resistance. Now that's an entry because the wick moves through. So that's crude. I mean, occasionally you're going to get stopped out, but you're going to get massive winners. There's an entry right here at 1407 to cap your day right here for 22 ticks. So it really does work on any instrument. Obviously, crude is a lot tougher to trade. Gold is much easier. The NASDAQ is the toughest, but no matter what you trade, this is going to tilt the risk reward way in your favor, because when you get winners, you get enormous winners. So it's really easy to take a loser right off the table and then break up. And I'm telling you, you rarely get a loser if you just follow the rules. Now, this is another trade that I forgot that I just didn't see right here, and that's another winner. That's a perfect entry on a yellow 15. Not a huge one, but you'll take every winner. It went 6. Your first target's going to be 5. You're going to have a modest first target, and then you're going to bank the money, and then you're going to let that second contract go as far as you can get it to go. And we'll set you up with our recommended automatic trade management strategy if you buy the system. We know exactly what you want to do in order to trail the trade. And basically what you want the system to do, I'm just going to draw one line here and I'll show you. Here's your stop. Here's your stop right here. So actually this is going to take you out. This when it gets to here, this wick is going to come through and take you out. Because actually your stop's going to be here. Because once it goes through the bottom of the trailing candle, that's where it's going to take you out. So one big wick will take you out of the trade, but not before you made nice money. On this trade right here, there's your stop. That wick doesn't get it. There's your stop. 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 And I think it touches it right there. So you get 90% of that move. So it's going to move up along the trade. So when it does either touch or break a candle bottom, that's where it takes you out. And it's really going to optimize your profit and allow the trade to run and minimize your risk. And you see on some of these trades, I'll show them to you. Now, this isn't the winner, obviously, but there's no wick. So there's nothing. I mean, this just doesn't make it because you don't get a two-thirds candle close above. But let's just say you did. You're going to trail this trade, and we'll set this up for you so that you keep moving up like this. Under the candle lows. This little wick doesn't do anything. You're all the way here, and here's where you get taken out. Right there. On that wick. But you've captured a gigantic amount of profit. When you actually capture on the trade and take home to the bank is 44 ticks. That's $440 on one contract. 5 ticks on your first. That's a $490 trade on 2 contracts. Now, if you want to be real, if you have the account, you can trade 2 and 2. Take 2 off and run 2. Then you'd make double. You'd make $880 on your second, and you'd make $100 on your first, and you'd be up $980 on one trade. So that's the whole strategy. I'm just showing it to you right there. Once you get in, your first target is 5, and then your second target is actually 1 tick below the bottom of your candle. And that gives you a real nice ability to let this trade run. Anthony, we don't have it alarmed yet, but we're going to alarm it. By midweek next week, we'll send you an updated, and we will have these alarmed, so you can watch multiple charts. But I'll tell you, right now, even with not alarmed, they evolve slowly. And if you're watching multiple charts, you're not going to miss the entries. But it's a great idea. We already thought of it, and we are going to alarm it. And we'll send you out that updated alarm. I think it's a great idea. The 3 number on the Renko? There is no 3. It's 5210. There is no 3. Yeah, for software owners. We could charge you the full price if you're a software owner, but we just don't want to. If you own the software, even if you own just the 3-line, you get it for $5.99. If you don't own anything, it's $9.99. So those are the two. It's the 2-tier price. Now, this is not an upgrade and not an add-on. This is a new system. So we didn't have to give our software owners any discount, but we just wanted to because they've been loyal, and we've had people with us 3, 4, and 5 years. So we wanted to give them a little bit of a discount on it. That's all. And some of them have paid us a lot of money for the full system. Yeah, Saxman, you will get the lower price. You get it for the $5.99. Any indicator, doesn't matter what you own, drops it to the $5.99. No, Paul. I know a lot of people are putting that in. We're going to send you the unit Renkos. We are, Ron. It might. We're thinking of, if this auto system outperforms the other one, why use them both? We'll go to the other one. And if you have the auto, you'll get this new one. It does. You're right. Fewer software upgrades. I agree. Okay, hold on a second, Stephen. Let me see. Let me get Rory to put that in. Hold on 1 second. Okay, it's in the chat. It's in chat. The buy link is in chat, Stephen. You should be able to see it. We already have 6. So if you want to be one of the first 10, I would roll. Jack, if you're a member of Ninja, of Ninja Trader, you don't have to subscribe to any special data feed. So like this CQG data feed that I have, which is the only data feed that you need, I get because I have an account with Ninja Trader. If you're trading another platform and you want to get CQG, I'll tell you a secret. It's not such a big secret, but I'll show you here. If you go to Ninja Trader, and you go to data feed, you can get it for free. All you got to do is put your first name, last name, phone, email, and select what country you're in. This will give you 1 month for free. And if you have a couple of emails, addresses, you're good for a year or so. So you can get the data feed for free. But I think the best thing to do is if you don't have the Ninja platform, just use them as a broker. We have a relationship with them. We can get you very, very cheap round trips. But you really should not have. CQG will cost you about $10 a month to zero if you have an account. There is, Gordon, only because we have created a whole new system, a the whole new system, Gordon. And I feel bad telling you because you've been so loyal. But it's $5.99 for complete software down to one indicator. Just give us a call, Gordon. No, it's not, Wes. It is a different indicator. The money flow are the correlative markets. Those are our quants. The 3 line is a completely different indicator. But if you have the quants, that entitles you to the lower price, Wes. Richard, I'm getting questions, but I know here's the inputs. You're going to get them if you purchase 5, 2, and 10. Sergio's going to set the whole thing up for you anyway. I mean, he'll send you a template and configure the entire system. You don't have to worry about it. He'll put the zip file in. You know what, Jeff? It just means that the oscillator is moving back and forth across that signal line, like right here. It's just jumping, and you just ignore all of them. That's all. They're absolutely irrelevant. The only signals you look for are the ones that are for a potential entry. You don't have to worry about those. And you see what these are doing is this is overbought. So it's giving you, in this overbought zone, this constant reversal sort of signal in an overbought area. We can take those out. Right now, it doesn't matter because they're irrelevant. All that matters is that cross of the signal line, and that's what's going to occur at the 50. When the move gets very extended is where you start to see them stack, and eventually we'll take the stacks out, but they're pretty irrelevant. And you can see when the move gets, but your entry is the only one that matters, and that's your key. And there's your entry right there on crude. And we already scaled it at 39 ticks, and you get all 39 here. Because if you look here, I mean, I think you can see it real clearly. I mean, here's your stop, just dropping down. Lower, 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 no wick. Lower, all the way down. So you don't get stopped out until it breaks right here. So of this trade, you get almost all of it. You get 32 of the 39 ticks. That is not a bad trade. I mean, if you're trading 2 contracts, that's a $370 trade. It's pretty tough to make $370 on 2 contracts. Paul, we give you zip files, and remember, don't worry about setting the system up. Sergio will set the whole thing up for you. He'll sign onto your computer and configure everything. And believe me, you'll have the Renkos. 2, 5, and 10. 5, 2, and 10. I'm sorry. It's right now. It's for 7, Stephen. We're working on moving everything to 8, and we're in the process of it. Well, it won't be long. Okay, I did show crude, John. The bar sizes are 7 ticks, almost all of them. Now, they can be no smaller than 5 ticks based on this input here, the 5. That is the smallest possible bar size. Most of them are 7, and the candle can be a maximum of 12 ticks based on the Renko settings. So if you have the biggest wick, if you have a 5-tick body and a full wick, you get 12 ticks. But that's going to take you out of the trade much earlier than this full 12-tick wick. Because you're going to, if you get a wick, you're going to be out when it traverses or hits the low of your previous candle. We're good. Okay. Roy, I haven't looked at it on the currencies. I'll be honest with you, but let's do it. I really spent the most time on crude, gold, and the NASDAQ, and the E-mini. Okay, here's 6E. I would imagine you don't get that many entries. Look at that entry. Holy moly on the 6E. Look at that. 8:48 in the morning. No, it's not. It's not 315 ticks. I think you have to divide it by 5. I can't remember. All I know is it's a huge move. Now, there's no long here. There's just no short because you don't have the 3 line. No short here because the 50 is rising. No shorts throughout here. See how it censors these trades? You're on a rising 50. You can't take the market short. And there's another long on a yellow 50. And look at that trade. Now, I mean, I don't know. I don't know how far that is. I just don't know. It's an enormous trade. Now, this is a smaller trade. It's at 4:48 in the morning, but it's actually not a bad time to trade. I don't want to alibi for this time. Now, this goes 4 ticks. Yeah, you have to divide that by 5. That's what it is. And 4 ticks on the 6E is your first target. And I'm not making that up. That's your first target. I mean, we'll give you all the stops and everything. Here's another one. And this is gonna go 5. That's a tough trade. It's pretty far off resistance, even though it's a winner. I don't want to start scaling it for you because I don't like it. Now here's a short trade right here. And that goes 5. So that goes through your first target. And look at that trade. I mean, heavens to Betsy. Look at that trade. So you got a couple of little ones, and then there's the monster. You haven't been stopped out once. So whatever 5 into 180 is, I'm not going to do it now, but that's a huge trade. So you can see you're going to get great trades on the 6E. I don't see anything giving you better trades on the 6E than that. No, we're gonna work to automate it, Ron. Yes, Sam. Just give us a call. Eric. Yes. I'm gonna put the E-mini in the room along with our standard E-mini. It trades too perfectly not to have it. I got to sit over the weekend and configure it and give it room. Crude's been trading terrible. Very hard to get a winner. And this just gives you, I mean, this morning, we could have gotten 13 or 14 points early in the morning. So yes, we're going to trade them side by side. No problem, John. Greg, you say, when will that be ready? But I'm not sure what you're referring to. If you just put it further down. I can't, Patrick, I can't do that right now. I'm sorry because I'm going so long. If you want to do that with me, I'll do it with you personally, looking at bonds on a separate, Renko setting. It can, Phil. I just don't have time to do it. I'm telling you, look, we've looked at the 6E, we looked at crude, we've looked at gold, we've looked at the NASDAQ, we looked at the E-mini. I'm telling you, you get the same moves on Forex. The problem with moving it is I have to change data feeds. I have to disconnect CQG, disconnect Kinetic, connect FXCM, totally rotate workspaces. It's going to take too much time. It'll take me over 5 minutes, maybe 6 or 7 minutes to do that. The FX I have looked at, you get great trades on the FX. Well, Gordon, if you want larger bars, I've looked. If you would trade a 10-4-20, and that's going to give you a much bigger bar, and it does work on a 10-4-20. But what you're going to get are 2 or 3 to 4 bar moves, and you're obviously going to get a big move, and they're going to come less frequently. But a 10-4-20 definitely works, Gordon. We're working on it, Greg. The candle has to be on Emma on a short trade. The candle has to be at least 50% to 2/3 below the candle body below the 50. The 50 has to be yellow or red, or the wick has to come and move through the 50, or at least touch it. If it's a tick off, it's up to you. But you're looking to be as close to resistance on a short and as close to support on a long. So you want the candle body at least 8 ticks off support, or you want the wick coming back through, and the 50 must be red or yellow on a short, or green and yellow on a long. That's it. Those are all the entry criteria. Then you need the 3 lines, so the candle must be outlined, and you need an entry triangle. That's it. Very simple entry rules. Now you see this is an entry. I mean, here's a signal, but there's no entry. You can't go long below the 50. You can only go short. And let me tell you, you're going to have 10, 15, 20 minutes between trades. They're not going to come at you like bang, bang, bang. And we are going to alert it. It's on. Emma, I showed you the exit. I'll repeat it one more time. We'll just make up, for instance, that this is a trade. Your stop is at the base of, so you're in this candle, your stop is here. This candle completes, and you're on this candle, your stop is here. This candle completes, and your stop keeps moving up. And this wick actually wouldn't take it out, because the stop is going to be 1 tick below the base of your previous candle. Then it moves to here. Then it moves to here, to here, to here, to here, to here, and here's where you get stopped out on this reversal. So you're going to get 90% of this move. And we program that for you. So we will program the trailing stop in to your Superdome. And that's how it's going to behave, though. That's how the trailing stop is going to behave once you hit your first target, which on the 6E is going to be 4 ticks. On the E-mini is going to be 1.4 ticks. And then you're going to be on that trailer. On crude is going to be 5 ticks, gold 5 ticks. I want you to lock in profit early and then get that runner to go 30 ticks or more. That's our goal, to get $350 on a 2-contract trade where your maximum risk on the trade, because remember, here's your stop, and I didn't talk about the stop. And then I'm going to try to move through the questions pretty quickly, because if you enter here 1 tick below, your stop is right here, 1 tick above the candle body, the candle base, right here. right here. So you're going to take about.
We're at 9, Mark.
9. We're at 9. You're going to take. This is on the 6E. Let me just go to crude really quickly. On 6E, that's 7 ticks of risk. 5 divided by 35. On the E mini, your risk is going to be fairly small. So let's say you entered here, 1 tick below the close. Your stop is going to be right here. It's going to be 1 tick above your entry candle. So your maximum loss on the trade, but doesn't go anywhere near you, is 7 ticks. So on 2 contracts, that's going to be 14 points, 14 ticks. And let me see, 14 times 12.5. So your risk is $175. And you're going to wipe that off the face of the map with 1 winner. And you're rarely going to see a loser. So that's how we're going to configure the stops and targets for you. Very conservatively. I don't know, Joe. I don't know where you get Renkos for TradeStation. I don't. I used to trade on TradeStation all the time, but since I've been on Ninja, I can't answer that for you. They're about a minute a bar, Doug. I would say they're about equivalent to a 1-minute bar. In certain markets, they may be a little faster, but not many. And in a lot of markets, they're slower. These are not fast bars. I mean, obviously, crude inventory is going to make them fly. But in normal market conditions, they are not that quick. This is okay. If you have the first version payment, we will upgrade you and change them for you. Okay. Not yet. It's not a Ninja Trader 8 yet, Richard, but we're working to roll it to 8 fast. John, I just don't have time for Google or Amazon. I'm wearing people out here. Hang on a minute. Let me see if I have it. I'll show it to you. I'm actually curious myself. Hold on. I'll put in Amazon. All right, it's going to Amazon now. Okay, here's Amazon. Oh man, we got no oscillator signal here. Okay, here's a small short. That is not a short. That is not a short. Here's a short. Not huge, because Amazon's very expensive. 22 cents. You can see why that's not a short. It's got an up background bias. This is not a short, no bias. No 3-line, I'm sorry. No 3-line here. So no short. Here's your first short right here. No short, up bias. This is a small short, and that's a winner. There's enough for a first. There's a winner right there. Boy, it's just not getting the resistance to get a trade. Look at that. The 3 line is not aligned, and the 50 is rising. It's too far off support. There you go. There's your huge winner. Honestly, I saw no loser. Here's your winner, and that's a hand me winner right there. This one wick isn't even close to the 50. Ah, there we go. A monster. I mean, that's a killer trade. That's 65 cents. That's a big move. Well, I was hoping we'd get a signal for that up. No, gee, well, no good. No good. There's a short, not a big winner. No short here, no 3 line. Nope. No up. Look how this thing moves. Holy God. Nope, no trade. No trade. 2/3 of the candle body's below. No good. No good. 3 lines in the wrong direction. It's hard to get a trade. There's a trade. Not very big. You know what? You might have to trade this on a bigger Unirenko. It looks like it looks like, look, there's your entry right there. It's not quite an entry. I don't want it because you don't really have 2/3 of a candle body close. You only have a third. So it's really not a perfect entry, but I think you've got too much movement here. I don't want to reset it now, but I think what you need on Google is you need a 10-4-20 on like Google and Amazon. I think that's right. We're not getting losers. We're just not picking up the winners. And that's the problem. And I think it's because they move too. There's no 3 line, no trade, or else you'd have a monster trade. I just think a rising 50. Now you're not going to get stopped out. It's just hard to get an entry because I think you've got too much movement, and the Unirenko, as we've said, it's just too much for a stock that's priced at $1,500. Too much. You see, it's just coming in a little bit early. If this arrow came a couple of ticks later, you would have gotten a big move. So that's Amazon. I just think that it's the Unirenko setting, and you'd have to change that. No, sure. Okay. The signals are the arrows right here, the ones that occur right at the 50. The red down, and the blue up. Those are the signals. These are just the oversold signals that occur after an extended move. Now, there's a trade. I finally got one, and you see the candles outlined in yellow, the signals right at the 50, the wick is through the 50, and down you go. Now, the thing that's remarkable is for the lack of losers. There's another winner right there. That's a very small winner. Now that might be a loser. I don't know. I don't have any idea where you would put your stop or target on Amazon. I would have to really look at it, and that's just not quite. It's just set too fast. You're going to get your trades, but I think the Renkos are set too fast. That's all. Al, the oscillator is just it's real simple. It's just your standard. It's an exponentially set oscillator, and you're looking at that blue line. When the oscillator crosses it to the downside, you get a red arrow. See right here? When the oscillator crosses that thin line to the upside, you get an up arrow. So it's just looking right here at this middle line. That's like the meat of where the oscillator is. So you're looking for it to close to the upside, up arrow, downside, down arrow. We're going to simplify this and make it a little bit when we put in the signal. But what I do and what I'm going to do when I trade it is I'm just going to squash it because there's nothing to see on it. The only thing that you're interested in are the arrows it generates. So there's really no reason to spend any time staring at it because it's not going to provide you with any visual information. And if you're trading 2 or 3 markets, it's just going to cost you entries. There's no reason to anticipate the signal comes intra-candle. You're going to see that triangle flashing, so you know that you're going to get a down close and you're in. I'm just going to go back. We'll see where the E-mini is. And this is all stuff that we looked at, and there's our short. We closed this out here, and now we're getting along. We have no trade, and we've already been through the E-mini ad nauseum. We've gone through a lot of trades on the E-mini, and I'm telling you, they are incredible. Listen, Jeff, some people like the Forex. I mean, I would not, I would sort of be wed to the E-mini. I would definitely continue to look at crude because it gives you great crude signals. But I mean, there's so few E-mini losers that I would just sort of like, marry the E-mini. We're going to start to use it out. We are going to trade it at live. Anthony, listen, don't bother to look at these colors. I know that, see this up arrow here? Look down below. Green, green, green. Okay? Take a look at every signal, and you'll see that they do align. Now watch. Watch here, right here. Now this is yellow, green, green, and the reason it gives you this color is because the MACD line is sloping up. It just hadn't crossed the signal line yet. When it crosses the signal line, then the line goes to green. But because I consider that a late event, as long as the slope of the higher term time frame MACDs are sloping in the direction of the trade, your candle color outline will give you a time frame alignment. So you can get an up alignment on green, green, and sometimes yellow, or a short red, red, and sometimes yellow. And if you look at every one of these, that's what you're going to see. Either triple green, or on some of them green, green. Now look at this down right here. There's no alignment there. Let me just get you an alignment here. Now here's an entry. Look at this. This is not an entry because the 50 is heading up. But don't worry. If you don't get it completely, I will go over it with you. See this? Here's the arrow. and you're red, red, red. So you don't even really have to pay attention to the 3-line either, actually. I mean, I hate to say it, but in all honesty, you can squish it. All you care about is the candle body outline, and the candle body outline color. You decide what you want. Let's say I want that candle body outline to be orange red. Now, orange red's not going to be a good color because my candle body, let's make it yellow, just for an example here. We'll make the down color gold, okay? So I hit that. You see now my down is outlined in gold. So you decide what color you want that candle outline to be. And when you see it, you have got a 3-line alignment. So don't bother even looking down at the 3-line. It's a very simple workspace because all the relevant information is projected onto your candles. And you don't have to spend your time with this crosshair, looking for the stochastic cross, looking for where the 3-line aligns. All the information is right here. So do yourself a favor, because this workspace is so easy and the entries are so good. Forget it all. I mean, I can forget about it. When the candle is outlined, this is a little bit too far off support. There's your short trade. You see the outline in yellow right here. You're in right here. Now you don't get your trailing stop is still all the way back here till you hit your first target. So this wick does not matter. And that shows you had an oscillator crossover. And you don't have to look at anything. And this all occurs intra-candle. So you're going to set your entry. We'll set it for you. 1 tick below the close of the previous candle. And it's going to go down to here for 4¼ points. And it's going to set your trailing stop. Once you hit your first target, it's going to be here, actually 1 tick up. Here, 1 tick up. Here, 1 tick up. Here, 1 tick up. So on, so on. And then it's going to get hit here when you get your reversal. So you're going to get almost the entire move. So from the entry, which is right here, to your exit, which is here, you get 2 points. You don't get all 4¼ I don't want to mislead anyone. You're not going to get this whole move down unless you take this risk. You can always close the trade, and you can take a second target at 3, 4, or 5 points. And I've seen traders do that. But this thing could go 7, 8, or 9. So you're going to get 2 points, and you're going to get, this is going to be in total a 3-point trade. And in total, you're going to get 4, 8. You're going to get 4 and 4 is 8. Wait, 4, 8. You're going to get 12 ticks on the trade. So it's 12. You're going to make $144. 12 times 12. So it's not a huge trade, but it's nice. But that, I just want you to see, that's that. And if you keep doing this over and over again, and remember, you're only taking $175 worth of risk. So this small winner almost completely eclipses one loser. It's a risk to reward that's unbelievably good. It's very simple to trade it. Don't even think about what's going on down there. Paul, I just went over those a long time. All the trailing stops and targets. We're going to program those all into your workspace for you. It's all based on the base of the candle, not the wick. 1 tick above for your out. You're in 1 tick below the close of your entry. And then as long as it doesn't come back above the high of the previous candle body, you're just going to trail this trade down. It's a great trailer because it allows you to capture between 75 and 100% of the move. And the one thing you don't want to do is get yourself stopped out and then have the trade go another 25 ticks. So you take a little bit of risk, but there's no reason that you can't hit that and just close it. If you want to take 4 points and you're happy with it, just close it. Yeah, Charles, for the high priced stocks, I would set it at 10,420. And we'll give you all that data. Now, Apple's like, I don't know, 160, 170. I can't remember. I haven't looked at it recently. I'm not trading it currently. But when you get to Amazon and Google, which are like $1,500, you got to go to 10, 4, and 20. Now, for all the futures, this is the same setting, 5, 2, 10. And Forex. That's your setting. Yes, Roy. I just showed you the 6E. The 6E traded incredibly well. And so will the 6J, and so will the 6C. No problem, Ray. You got it. Thank you, Ron. Listen, the faster you make this, the more likely you're going to get nailed in chop. We get such great entries the way it is right now. And you see that you get some short entries on a green 50 that don't work. And you get some long entries on a red 50 that don't work. And remember, Ron, our key is not to get all our winners, but to try to censor all our losers. So my recommendation is to keep the 50 exactly the way it is. Keep the slope degree the same. It took us a long time to determine the slope degree where it turns green, but yellow is fine. But where it's going to turn from red to yellow is key, because you can't take a down trade until you get you can't take an up trade till you go to yellow. I wouldn't make it faster, because you're going to get whipped in and you're going to get whipped out. This just about censors every single trade that isn't going to go. So that's our goal, and I think we've pretty much achieved it. Maximum, okay. It's all recorded. DJ, yeah, the software is 20. Actually, any other, I mean, we're going to give the discount to anyone who buys who owns right now any indicator. The full system is really $39.99. Some people have the 3-line. Some people have the quants, and we're going to give them credit for it. So if you're a member, you're going to get a discount. If you're not, the indicator that you're going to buy is going to pretty much equal the discount. But we have some people who've paid a couple of $1,000s already, and we our what we always do is give upgrades and add-ons. So if we ever make this system better, and I guarantee you we will, like when we add on the audible alert and we make it better, we would never charge you anything for it. So any upgrade or add-on to this system, you always get for free. And this is just a new system. And I almost feel guilty charging our long-term clients, our long-term traders, anything, but we have to do something because it took us a lot of time to get it. But we want to give them at least a discount. That's all. I'm not sure what you mean, Gordon. Like, if that's your trade, you have no trade. You can't take the next trade. The entry candle has got to have the entry candle. That's what's going to maximize the potential. Right here, that would be an entry candle. It's not an entry, but you see how this entry candle has the arrow? Even if it has a wick, you enter. It doesn't matter if it has a wick. In fact, the wick is what allows you to enter, because that wick traverses the 50. And this wick traverses the 50. It pushes price far enough back so that you can get your entry. And this wick is irrelevant on your next entry because you have not hit your first target. It's going to give you some heat for sure, but you're fine. Anthony, we're going to add, I think you might have asked, we're going to add that alert this coming week. If you have the system, we'll send it out to you for free. We'll send you that upgrade for free. I don't know, John. I know what you're saying. You want that. You want to see that 50 all the time. I don't know how to do it. I really don't. I know exactly what you're saying, though. Sometimes the color of the 50 is hidden. Here's what we'll do. Here's what I'm going to do. Just because you did that, because I'm a nice guy, here's what I'm going to add. Hang on a second. I'm going to add an indicator to this platform because you just brought up something, and I'm going to show you what we're going to do. Let me find it here. I'm going to have Sergio put this in, and this is a big deal, but we'll do it for you anyway. Hang on a second here. I have to find it. This is going to make that assessment really easy for you. Hold on a minute, because I really want you to make money. Here it is. I think that's going to do it. See this? Now you're going to get the slope of the 50 in the upper left-hand corner. All you have to do is glance at it, and I'm going to add that to the package because you brought up a real relevant point, and that is sometimes it's very hard to read the 50. So now I'll add the moving average analytics because it never occurred to me. Now the MA dip, this is irrelevant and won't work. Nothing off the 15 will work, and this is the total volume of contracts crossing per day. But that slope of the 50 is going to give you a visual and be able to tell you even if you can't see the 50. So the problem is cured. Okay, John? I don't know, Anthony. Sergio's going to start working on it. I couldn't give you time. It's not Bloodhound compatible yet, Adam, but that's on his to-do list. We've had a lot of people ask us about it, and we're going to work on it. All right, let me look at that. At the 12:10 p.m. crude. Let me just go really quickly because we're going so far over. Let me move back to crude. I should have kept this open. Then as you asked the questions, I could have. Let me look. Now you're going to see how the slope of the 50, okay, here's crude. You can see the slope of the 50 is green. 12:10. No, if you look throughout here, there's no 3 line through all these candles. On this entry long, you can't take it. It's below the 50. This entry long, there's no 3 line. This entry long, there's no 3 line. So there's absolutely no trade here at all. So you can see in this chop, you're saved from this chop. There's no way that you're going to get into this trades. There's no signals here to take. Yeah, no, we're going to automate it, Frank. Listen, it's just not quite as easy as it sounds, but we're going to work on it. Trust me. It will automatically adjust. This is NinjaTrader. Payment. Remember, this 3 line is assessing your 2 higher time frames. That's the major indicator to get you into the trade. This is a multi-time frame assessment. So yes, that is critical to this performance. Is that multi-time frame assessment. I mean, that's part of our dogma that we will never drop. Ron, it looks to me like it's got them beat when it comes to range. I'm still going to trade a range chart, but I'm pretty sure that I'm going to be trading the Renko on the E-mini. I mean, they configure completely differently. Right now, Stephen, it's for 7, but we're working on upgrading everything to 8 very shortly. On the trade, the third candle, I just don't know which can. Okay, 12:10. No, there's no entry signal here. There's no triangle. You can't take a trade just because the 3-line turns. You have to have an entry triangle to get a trade. So none of these are valid entries. No, Fitzroy, you get the oscillator, the 3-line, the 50. I'll show you the indicators. That's a good question. You get the Unirenko bar. There's 2 packages to format the Unirenkos. Get our moving average, our 3-line, our oscillator, and now you get our moving average analytics. And you get a system that's going to make you money, which is, I think, the most important thing. We could have 1,200 indicators in there, and if it didn't give you a great signal, they're worth nothing. So that's really the key. No, James, that means if you bought one of our indicators or our software or one of our software packages, that's what software I mean. Something from Rightline. That's it. No, if you're a software owner, James, if not, it's $9.99. If you're a scratch guy who's never come. But let me tell you, I think you can make $9.99 in one day. I like to underpromise and overperform, but you saw the trades. This thing takes terrific trades. And if you can't make good money on it, I'm telling you, it's most of these trades are no-brainers. And that's why I spent so much time on the charts and not beating my head showing you JPEGs, because they are just useless. I can show you everyone right here. This is on the E-mini. This is an 8. I'm sorry, this is on crude. It's a 33 tick trade. And I think it's actually further. I don't think I scaled it right. That's a huge trade. And I'll give you how far you are going to go on 2 contracts. Your entry is right here, and you're going to get stopped out right about here. You've got 26 ticks and 5 ticks. You got 31 ticks. Now that's a $300 plus trade on 2 contracts. On 1 trade, and that is a valid entry. I mean, if you can't take that entry, forget it. And now you don't have to see the slope. Now, because this kind of blocks the slope, all you got to do is look in the upper left-hand corner, and right there, it's telling you that the 50 is green. So now you don't have to worry anymore about being able to see behind those bars. Okay, let me look, Jack. Jack, I can't find it. I'm sorry. I'm scrolling way up and I don't see it. I apologize. Yeah, Anthony. I mean, there will be some additional charge for the auto trader. It's going to be a lot less to you as an owner of the software than it will be to somebody who doesn't own anything. Okay, Roger, click on the 50 and hold down the shift key and use the scroll button on the mouse. Let me try. Click on it, hold down the control. Listen, I'll have Sergio try. I don't know how to do it, but now you don't have to worry about it, though. I mean, I believe it can be done, and I'm going to talk to him about it. But because you got it up there. I appreciate you trying to teach me something. Sure. Let me. I trade on crude at 11:22 a.m. today. Crude today at 11:22. Well, if you took it right here on 11:22, you got a valid trade. Your entry is going to be here. Your high is going to be here. And you know what? It's a loser. Not going to, not going to hide it. That trade went one tick less than a full target. So if you got it on a different system and you got in earlier, you would have been okay. Here, it's almost the first loser I found, but that is a loser. Okay, Alex? I mean, you found one here, and I'm not going to hide it. And I think I scaled it right. If it went one more tick, it would have hit a first target, but I don't think it does. Now, here's 35. Here's 36 right here. And the high is 43. So it went 7. So it was a winner. Here's the close of the bar right here. The close of the bar is 28. So you're going to be in at 29. Wait, wait a second here. Oh, here's your entry. I'm sorry. Excuse me. I don't know if it's going to get you in, because here's the close is 38. So you're going to be in here. I scaled this wrong. I apologize. You're going to be in at 39. And the high of the move is 43. It is 4 ticks. It just misses. So that is a loser. And that wick does cross the 50, so it's a valid trade. So it is one of the rare losers, and it just missed by a tick. Great, Alex. I'm glad you got it. Okay, well that's it. I mean, I really put it through its paces, and it's gonna show you exactly what you see here. I mean, it's not going to trade any differently than I showed you. I mean, I'm just taking the same candles on the same charts that you're going to get. And I'm telling you, you're rarely going to get a loser. And we'll set up the automatic trade management strategy for you and set up the whole configuration. So thank you so much for giving me your time. I'm going to keep this on. We're going to record it. We'll send it out. It's obviously very long, but if there's any piece of it that you want to review, you can. I think we might have all 10 orders. I don't know. But we'll extend it for the whole day. So if you come in, if you order anytime today, we'll give you the trading room. I want you to come into the trading room. I'm going to trade this on the E-mini. And I want to teach you how to trade price action, market structure, everything. This week, I would consider that I would say we had a very mediocre week. And I'll show you our week in the trading room. Like I said, I don't hide anything. Here's our account performance. Let me go to trades. Today's the 16th. Here's the 12th. And if we go to summary, we made $1,242.50 for the week. Now, I mean, to me, I don't like that week. I mean, I want to make closer to $2,000. And actually, what I did was I took us out of a lot of trades we were in. This morning, I closed a trade at break even on the E-mini that went 2 points. I meddled with too many entries. So we made $1,242.50, and I consider that to be okay. That's a single or a double week. But everybody made money. Everybody pushed up their equity, and we're going to add it the Renko tomorrow on Monday. Thank you, guys. Thank you all. So welcome aboard. I hope to see you in the room on Monday. Let's make some mega loot here. And look, we're up against the other small guys. We can never take money from the large institutional guys. It's just us taking money from those traders in those counter trend trades in the wrong direction, trading oscillator divergence, MACD divergence, Fibonacci, Elliott wave, those wacky systems that just don't work. And we're gonna take them. They're gonna take their money. We're gonna take their money. Either they're gonna take ours or we're taking theirs. So that's all we got. Those are our two choices. So just one more time, this is our website, rightlinetrading.com, email at info, and our phone number 786-713-5276. Have a wonderful afternoon. I hope to see you on Monday morning. Take care, everybody. Have a great weekend. Bye-bye.